Ladies and gentlemen, we are live. We are back. Another show with TradingView and TradeStation. As always, we have got David Russell here with us. And as you know, one of my favorite parts about this show is that not only is David Russell the head of market strategy at TradeStation, but he is also the man behind the TradeStation account on TradingView, which means you're getting direct access to him through this show and through all of the ideas and content that he's publishing on TradingView. So I really don't think there's a show like it where you're getting that level of access to someone who knows markets quite well and is constantly publishing very interesting insights about the moves. Now, before I get to David's intro and let him take it from here, let me remind you all that this show is proudly sponsored by TradeStation. TradeStation pursues a singular vision to offer the ultimate online trading platform and services for self-directed traders and investors across the equities, equity index options, futures, and futures options markets. Equities, equities options, and commodity futures products and services are offered by TradeStation Securities Inc., NYSE, FINRA, CME, and SIPC. They are members of. So, David, I'll let you take it away from here. You've got a disclosure yourself. Then, everyone, we're going to get into the details as the end of the year nears.
Well, great. Thank you, Steph. So I am just now showing our standardized returns of some ETFs. We just use these for kind of benchmarks as like indexes showing price performance. So I wanted to show you these standardized returns before we start. I'm not just kind of turn this off and jump over to our TradingView charts. And it's great to be with everyone. And basically, here we are. The S&P 500 is up, well, on track for its second consecutive year, at least 20% to the upside. And the last time that happened was 97 and 98, which is pretty interesting. So it's pretty interesting to actually kind of, put things in that context to see that, we had this incredibly strong momentum on the optimism about the Fed cutting rates at the end of last year. Now we're going through that entire cycle. And if you look at the market overall here, this is the S&P. Now, there's a few things about it, I think, as things kind of evolve. I'll just very quickly mention about the S&P. The first thing is that for a while, we were talking about these kind of, the tendency of having these tight consolidation patterns with breakouts. That behavior has almost completely stopped. If you look at the last few times we've tried to do it, we've had much bigger pullbacks. And that's interesting, but it's also a sign of the market evolving more and having bigger pullbacks. In the earlier stages of the market advancing, you tend to have rallies with tight moves and then continuation. And then as you go further, you get bigger pullbacks. It's just an interesting pattern to notice, but some of those bigger pullbacks in the end, like we had here in the summer, can give some of the most dramatic rebounds. So I wanted to mention that. Now, what stands out to me, a few things that Steph and I have talked about, is that the RSI has gone back to overbought. And we've talked to this concept of RSI kind of going up and cooking at overbought levels. And that's a sign of positive momentum. And here we are, pretty much back toward that level on RSI. And back here, you can see what's interesting is when the rally started, it went to overbought, and it really has not gone to oversold in over a year. Even it got close to oversold back there in April, did not do it. Same thing in August. But it went to overbought. All this time, it was very tight uptrends. I'm not going to do it, but if you went back to 1995, it did this the whole time. So what's interesting to me now here is that, first of all, it's interesting just to notice that this is a 50% retracement. You're going to quickly notice that this level back here was a very strong level on this pullback because you had a 50% retracement and the old high. Now, the level that we're holding this week was basically the close back at the end of November, the weekly close, and then it was the low the following week. So all these things are kind of continuing to behave the way you'd expect for something of a tight uptrend. So it's just kind of interesting to notice that. Now, this is the advanced decline line. Now, what's interesting to me is the advanced decline line has been falling. But what is also interesting or noteworthy about this is that the advanced decline line tends to go up and breadth improves when we actually see money moving away from the large caps. So what we're really seeing now is a shift back to the mega caps, and this idea of the equal weighted, this idea of rotation and value, that's just out the window now. So now we got to go back and look at the Nasdaq, which is right here, and this is pretty interesting. So the first one with the Nasdaq is, let's look at this on the weekly chart. I'm going to take these away really quickly because we don't need this now. So on the weekly, we've talked a lot about the pattern of having new closing highs. We had a new closing high there. Look at how we pulled back and held exactly and then continued. Another new closing high on the weekly last week, and then small pullback with a continuation. So the fact is that throughout the period of August and September and October, we were in a period of industrials, financials, and utilities, and some of these other, maybe not utilities, but some of these other sort of parts of the market, especially financials and industrials. But the Nasdaq really had kind of taken a breather, and now we seem to be in a new phase of a new breakout in the Nasdaq. I think it's important to realize here. So as we look at this, from my view, this is something that's hard to kind of ignore. The Nasdaq has broken out to new all-time highs, and it hasn't done this for a while. So we have a relatively new breakout, and we're in a period where optimism has been kind of improved. Volatility is remaining pretty low, and that could set us up for something of a steady sort of drift going forward, toward year end or even toward the beginning of earnings season here. What I think is very interesting is we have seen a real kind of litany of positive news in the mega cap names. We have seen things like Tesla be reinvented as an AI robotaxi story. We've seen some very interesting news out of a company like Amazon, which unveiled a whole slew of different AI things, partnerships and new products and things like that. We see Apple just trickling out AI features. We see Google showing very interesting strength in its cloud business. So all these are things that in some ways are just kind of coming back. For a while it's like, oh, AI is overpriced, Nvidia is overbought. But now suddenly the AI trade is coming and moving back to those other names like Amazon that had something of an AI trade, but it wasn't as clear. Anyway, so that's what I see happening here, and that's what the Nasdaq is telling us. Steph, we always like to look at how the charts tell the fundamental story, and that's what we're seeing here in the Nasdaq. It's telling the fundamental story, those things that I had mentioned, and also there's some other things I'll just quickly mention. A name like Reddit, this name is now emerging, not around for very long. It's now emerging as an AI name. Another interesting thing about this year was we had companies like Palantir, which for years, basically there were certain retail investors who loved it and Wall Street didn't like it. S&P then was basically forced to add it to the S&P 500. I thought it was pretty interesting because it's the same thing like with Tesla. They didn't want to add it. It was bigger than most of the index and they were kind of forced to add it. And I think it's interesting to kind of see that now. And I look at something like Reddit. Look at Reddit now. It's a relatively new company, but you're talking about a company that has a major position in the modern digital economy, whatever you want to call it, mediascape, whatever this new world we're in now of social media, online content, whatever all this stuff is. Reddit is a big player, and they are now attaching themselves to AI. They're very much involved in trading and things as well. So you need a name like Reddit, that's another NASDAQ name. So we are seeing the fundamental stories emerge with the NASDAQ here, and that is what we're seeing. So the thing that jumps out to me now is breakout in the NASDAQ, return to mega cap growth, and that's to me is the main theme that's really jumping out right now.
Well, David, I have to say, I've got a few comments to bring up here, but for Reddit and Palantir, could you actually pull those charts up just so people can see the extent of these moves? Both those names, that's Reddit. I mean,
yeah,
I remember, wow. And to speak in Palantir, so what's so interesting about the Palantir chart to me that you have up now is exactly what you were saying is look how everyone thought it was sort of dead during I think it's about 2022 to 2023. And it just reemerged and it actually makes the 2021 pop, now it looks perfectly normal. And it's just very interesting to see these stocks like Palantir and Reddit making such comebacks and breakouts, despite what I remember being quite a bit of pessimism about these companies. And very interesting. I'm wondering what your thoughts are as we head into 2025, if you think these types of maybe trends could continue, or if you think there's other names out there maybe that could be forming similar patterns. And the Reddit chart as well. I remember when Reddit went IPO, people thought that was a bubble. It was very overvalued. And now you look at the chart, the IPO looks like it was a bargain. So quite interesting moves here at this level.
Well, I just put up my message. It's thought you and I have had before, which is that in a bull market, sellers get burned. And I think essentially there were, there have been a lot of these different names that have come exploding back. So I think what's very interesting is, especially in this phase after, so let's look at the stocks, the semiconductors here. This peaked back here in July. Now look at something like Palantir. Look at the same spot where basically the semiconductors peaked right about here. That's when Palantir took off. There's been other names as well, like SQ, kind of took off. And then there's several others, various Cathie Wood stocks, names like Twilio. Look at it from July. So what we've really seen in the last couple of months is a rotation away from Nvidia and semiconductors toward those non-semiconductor growth names. And I think that's really the way to think about it here. There's many of them that have been doing this. I don't have a list of them actually right now in front of me, but there are. I mean, Fastly was one, and that's not exactly, but we did a TradingView idea, on this recently. But there's some of these different names that have been kind of jumping to life recently that were the kind of non-chip growth names of 2020 and 2021 that have now been coming back. And I think that's important because the thing to remember about them is these are not hardware companies. These are not chip companies. These are services companies. They are different kinds of fintech. It's very interesting to see the comeback in some of the fintech things now. And so I think right now we are seeing Cathie Wood having the Cathie Wood approach of the innovation growth investing that is making a comeback as people shift away from semiconductors, and that to me is kind of the what these things are telling us.
So I didn't expect us to go this direction, but I have some names for you to pull up in this regard that I think you will find fascinating as well. How about Carvana, CVNA? I'm sure you remember the Carvana sort of mania after COVID. It's just, I was looking at this chart the other day because it's one of the year's top performers. I was thinking, I had no idea. Another interesting one that you might find fascinating is Robinhood,
Yeah,
HOOD. I was so surprised to see that Robinhood has had a comeback like it has, especially after Reddit and GameStop, right? There's all that drama. And yeah, these types of patterns have really been interesting, I must say, as we enter the end of the year. There's several other names that could come to mind. I think the stock AppLovin is now the best performing stock of
yeah,
the year. And I mean, this chart, yeah, David, if you zoom out on this one a little bit more too, look at that.
weekly. Yeah.
I mean, out of nowhere, essentially.
I would say the thing to remember about these things is that these are, see, I have a strategy now that I'm actually starting to kind of do my own personal investing more. I'm looking for stuff that I can hold for 3 to 5 years, and I'm buying like companies under 30 billion in market cap that have what I consider a huge total addressable market that they're not big in yet. And I can't get into those names. I can't talk about them, but I'm looking for companies that are under 30 billion that you look at them and it's like they're a little piece in a much bigger industry. And something like, I mean, app loving is interesting because that's a growing business overall, and I don't know this company as well, but a lot of these different things, you look at something like Robinhood, it's a huge industry, and they are making inroads, and they could in theory grow a lot. And I think that's what we're seeing here. So what's interesting to me is this is like the old longer term kind of growth story. It's like I'm now starting to look for those companies that I don't want to say it will be the next Nvidia, but maybe it will be the next Adobe. If you could have bought Adobe in the year like 2010, you would have done very well. I'm kind of looking for those sort of companies that have that kind of potential. And I think I'm not the only one doing it. There have been articles about how stock picking is the new trend in the market, about how correlation between the S&P and its member stocks or the indexes in the member is at all-time lows or multi-decade lows. People are now looking for individual stocks, looking for those individual growth stories, and not just kind of plowing money into the index and letting Nvidia, work for them. So I mean, it's still true about the Nasdaq overall, but we are seeing this kind of trend toward stock picking, and that's what a lot of these stories you've really identified are. These are companies that are that next tier down. And I think if you really look over time, the companies, if now this is not for trading, but for serious long-term investing, the companies that really make the biggest returns over time are those companies that you believe will be in the S&P 500 in 3 to 5 years. If you can look at it and say, I have reason to think at a company like this, their whatever it is, their business is growing, they have that base, that solid thing. I mean, sometimes we trade things like I've traded things like coal miners sometimes, and it's fun to kind of get these crazy moves in certain stocks. But at the same time, it's like if you're going to think about investing, I think this is a way to think about it. If you look at those companies that have, you know, under 2 billion of revenue, that are kind of under 20 billion of market cap, but you can look at them and say, as long as they execute on their business, they've proven that they can do it, and now they can execute on their business, they can grow significantly. And that is what I think people are doing now. I think there's a new growth ahead of us with AI being applied to business, with just the next iteration of what cloud computing means, and the fact of just normalizing economy after the extreme volatility that we've had the last 5 years of everyone stopping working, everyone starting working, stimulus, rate hikes, everything. I mean, it's been a macro, very crazy. This is like unlike anything in history of modern economics, the kind of volatility we've seen. So now we're just stabilizing into what does the next 5 years look like. And people look at it and they say a company like AppLovin, maybe a company like Robinhood or whoever. I mean, those are the companies I believe in 3 to 5 years. And I'm not saying I believe that. I don't even have an opinion of Robinhood because it's a competing brokerage, but it's more the question of this is the new mindset in the market, I think now. It's not just about the idea of the Fed's cutting rates or they're raising rates or there's inflation. It's a question of individual company stories. And that to me is the new trend.
And you mentioned Palantir in the S&P 500. If we pull that chart back up, which I think many
Oops.
viewers will find so interesting with Palantir, is Palantir got added to the S&P 500. I don't know the exact the rules. Maybe it has to hit a certain market cap. You might know better than me. But it's really interesting that it ran up so much that it essentially became an S&P 500 stock,
Right.
which then brings in more funds, right? Because now the indexes have to add it, so they have to acquire some. Is that how it works? If you're picking those types of stocks before they're in the S&P 500, that's kind of how you could hit a proverbial home run?
Yeah, let me be clear. This is for investing, and I wouldn't even want to make too much of a big deal of trying to really predict. But it's a question of looking at like saying, what is that kind of company that has that growth ahead of it based on the size of the market versus its presence, how big it is now. So yeah, that's an example. But I would say the greatest example of all time was Tesla, not even Palantir. This was where they got added. But I mean, Tesla they forced that into the S&P practically because it was so much bigger than like probably. I mean, it ranked in the top 10 of the S&P even before it was added in market cap. So that was, I think, the greatest example of that of all time. But yeah, that's exactly the kind of thing I'm talking about. There were people who are experts in this company, and they said this is going to be a major company that people use. They were believing it all through here, and there were analysts talking about it, but there were people who really knew the business who said it was going to be a big company, and then they basically, pushed it that way, and then S&P had to play catch up. So I think this is what the trend's going to be, but it also means that it's a question of identifying some of those companies and following them. Like it's going to be more like back in 2020, 2021, when you'd have these companies that had these. I mean, look at a company like Fastly. If you actually look back at what it did in 2020, like it was an incredible rally. Look at some moves like this. These are the kind of things that people are going to be looking for. That's kind of what AppLovin looks like, and some of these other names. There were other names like this, names like Zoom Video that had this incredible rally. That's the sort of thing that I think people are now starting to look for. And this is what these kind of growth stocks can do, these smaller, kind of growth stocks. And so, yeah, that's what the environment I think we're in now.
And you know what's interesting to add to that point that is especially it's fascinating about something like Zoom? Oh, wow. So Zoom's making a move now too, it would
Yeah.
appear. Wow.
Yeah, they've been coming back.
so interesting into the end of the year, and which we'll touch up on the Santa Claus rally, end of the year, some decision making, if people are tax loss harvesting or things of that nature. But I would say that everything you were saying had me actually thinking of the dot com bubble. I know that's sort of a market event that comes up on the show quite a bit. But the reason why I was thinking about the dot com bubble, speaking about these types of moves, is if you were to look at like a chart of Microsoft back in the dot com bubble and then its price today, you would actually come to realize like, wow, they were right. Like they bid it up to the, in the dot com bubble. It eventually crashed. But over the long run, actually, they were right. And Microsoft not only reclaimed those dot com bubble highs, but has greatly exceeded the dot com bubble highs. And I'm just wondering if we'll find now that some of those 2021 bubble, I wouldn't call them bubble stocks, but 2021 mega moves, maybe they turned out to be right. Like Palantir was up a lot. Now look at it, it's going to be up beyond it. So I was just thinking about that aspect of it's quite interesting. We thought it was sort of the top, but the market was right. It just had its washout. Looks like you have Spotify pulled up. Is that right? Similar move?
That's an example of a company that, you know, I mean, maybe I'm showing my age, but that, CBS, NBC, I mean, you guys under 30 probably never heard of ABC News or NBC. I mean, it's like, who even knows what it is? When I was a kid, that's all there was. And now it's like there's Spotify. It's all there, and I think that's the way it is. This is changing now. Spotify now has the equivalent of something like an NBC News back in like the 80s. And that's what it's become. And that's a good example. I mean, I think actually one of the better examples, when you look at something like Spotify here, how it essentially had,
Wow.
I would say that this is an example of exactly what we're talking about. There's a company that has
Wow.
become, a mainstay. It's become a big part of American kind of, and not just American, but just modern economic landscape. If you're an advertiser, whatever it is that you're trying to reach people, they are now part of that conversation. 10 years ago, they were not. And so I think that's a way to think about it. I got to just really quickly show you one that I noticed just yesterday that is the exact opposite, which is I just noticing not Coca-Cola but Pepsi. Look at this. Look at this ugliness in Pepsi. Look at how it's trying to cling to this level. I wanted to just mention that
Oh
because
no.
this is kind of on death watch, maybe. Not but breakdown watch. I want to just mention weekly chart of Pepsi here. Look at how it's trying to hold this. In fact, you can put it back to here. But this is one that just popped up to me, and let's just kind of see, because here's a company that, you know, if you're Pepsi, you used to be able to, thrive by advertising on NBC and stuff. But there's just a thing now where like that whole form of marketing and advertising and the business doesn't work the same way in this modern age. And some of those kind of old companies, these are the ones that are kind of the there's a flip side to the growth, and it's not always just exactly what you think. It is other companies, even like these traditional consumer products companies that traditionally would advertise in the old channels that are now kind of, they lose their edge on that. But this is an example of that. And I want to just mention, I am watching this one for potential breakdown.
Well, I think that's also a great segue now into some of the end of year concepts or trades or stories, and then heading into the new year to sort of break down or look at. I think you had mentioned to me before we jumped on the show some of these sectors that you were looking at in
Do
terms
you
of
want
the,
to?
oh, let's do interest
Let's look
rates.
at we got to look at the 10 year though. I think it's important. I mean, to me, this is the biggest thing to be aware of right now, and I do think that this is something that could kind of become a problem. If you look here, this is a 10 year, and I'll be honest, I thought we were going down here, and the fact is we're not. And the deficit data is really getting terrible. If you look at the just in November today was bad, and so I think right now, there are reasons to be wary of yields. Now, it might be a wall of worry that we climb. It might be something that we whistle past the graveyard for a few months and then we freak out about it. It's not really clear, but I think it's important to realize that when you look at this sort of chart here, we had this downtrend. And so what bothers me, if you want it, well, let's just say if you want it to go lower, which people do if you're more or less bullish on stocks overall, is that it made a higher, I mean, it didn't go down the channel. And I've seen this. This is often the beginning of what it looks like when you escape from a bull flag or a bearish flag the other way around, when it doesn't go all the way up to the top of the bearish flag. So it made this higher low here. And then what's interesting is now it's holding at this level. So there was basically an area across here that I've actually taken off my chart because it lost relevance. But you can see here, we basically, there was this level at this high, there's a weekly chart, we broke above it and then we held. And this is when I started getting worried about interest rates in October, when we broke above and held that level right at around 4%. And now here we are making a potentially higher low above 4%. So I think right now we have to realize is that there's a chance, and we've talked about this, if you look on the much longer term, we have this long-term downtrend in yields, but there's a chance here that this is actually going to become more of a problem. We kind of breaking through it. And I think that some of the policies that we might be seeing from the new administration, potentially would not be, would potentially be pushing those rates higher as well. So this to me is the main thing we have to be aware of. Now, the flip side of that is that the Russell 2000 is basically back. Actually, I think I have it on this chart. I have two different charts and I put my drawings in different ones. So basically here we have basically the emerging double top here on the Russell. And I think this might actually be, if people are looking, if we think the market's going to maybe drift and then have some kind of decline, especially with the Fed next Wednesday, and that's almost what I'm kind of thinking here. Often you get a drift into the Fed and then the selling comes after the Fed meeting. So, this might be something here where, look on the weekly. This is actually 2-week candles. This is now like this is not what you want to see if you're bullish on the Russell. And I think if you look now on the daily also of the Russell, you basically have, look at these, I'm sorry. All right, look at all these candles. They're like solid as can be. This is just sell try to rally, fail, and every single day, try to rally, fail. We had like one day since November 25th that we actually closed pretty much above the open. Except for this tiny little doji, but look at this. This is just, look at this huge bearish engulfing day. We have a tight day. We try to rally and then boom. It's just bleeding here. So this to me is also, I'm actually kind of have a half form TradingView idea right now I was working on. But I think this is kind of interesting here. If we look at this and then we look at what's happening with yields as well, higher yields, according to the textbook, would be, in theory, bad for the Russell for various reasons. They have more debt. They are whatever you want to say. So to me, this is actually something now I need to kind of point out. The combination of the yields moving higher, the Russell languishing, especially with this kind of double top, this might be something here where people actually see some potential for this thing. We have a lot of space down here. If this was the reversal, there's a lot of space in this range. So.
Oh, sorry, I had my mic on mute there for a second. I have to say, this double top on small caps, with the insight that you started the show with in terms of the large cap tech stocks, has really surprised me, because I think after the election, there was sort of this theme brewing that this might be a chance for small caps to reclaim some gains and to get some favorable treatment with maybe a new administration. But actually, the opposite has happened. The large caps, as seen in the NASDAQ 100, have been soaring. And the small caps, while they did soar, which is nice, right? They made it back to those prior highs. Now they seem to be hitting a little bit of resistance on that double top. And it will be rather interesting to me to see if they can eventually take those double tops out or not. But one thing I would love to ask you about, and it's something we were chatting about before the show started when we were going through some of these charts, is what's your view on the move that's happened in large caps? Too much, too fast, pricing in too much good news? Curious to hear your thoughts on that when it comes to large cap tech stocks that are dominating the market at this point in time.
Well, guys, a lot of these companies, they have real fundamental stories now. And I think, honestly, look at Amazon. This company has just had a litany of interesting incremental news in the last 2 to 3 weeks. They had a strong earnings report, and now they've just been trickling out one AI headline after another. Various partnerships. I can't remember. They have a PagerDuty and another one, GitLab or something. They rolled out new AI tools and models for helping. So if you're like an AWS customer, I don't know exactly what it is, but essentially, if you're an AWS customer, they have more tools that you can now use to build, AI things on, in the system that you're already using, because so many people are already running their systems on AWS. Now that's going to, potentially make their business more sticky. There's value add in that. I'm sure there's ways of monetizing it. So that just makes their existing business more robust. So I think that's, so to me, the thing in the large caps now makes a lot of sense. And I think, these companies like Meta and everything else, the fact is that they have all kinds of opportunities ahead of them of how they can, benefit from the AI thing. And the other thing is that, people did notice this before, but these companies, a lot of them have a lot of cash on hand. They don't have a lot of debt. So higher interest rates is not bad for them. If anything, it's almost a little bit of a good thing for them. So I think here we're in a spot where we're back to where we were. It's kind of like an exclusive club, and now certain companies have joined the club, like Palantir. Um, and then there's others. I'm trying to think of some of these. There's a couple of others. Maybe Oracle, is now kind of part of the club. And then you have other companies that have left the club, like Adobe, which I've written about before, having being a troubled kind of name that is kind of just it has not been performing as well. It was never a mega cap, but it was always one of them. It did very well during the pandemic, and now it's kind of like it doesn't seem to be in this part of the cycle. At least ServiceNow, on the other hand, they've joined the club. So ServiceNow has joined the club. Palantir, Oracle. So the club now it has some different members, but most of the big names are the same. And the fact is that we're at that point where AI. I mean, the thing is, if you went back and said in 1969 that television has seen its peak, well, yeah, it had, but there was a lot more ahead. And so I think the fact is that that's where we are now. I mean, if you look in the early stages of the internet, it was Cisco first building the hardware, and then I mean, Google didn't even exist until 1998 or something. So I think now in the NASDAQ, to me, it looks like that's really what it's telling us. I want to just highlight, this was when Trump got elected. The NASDAQ struggled for a few months and then it took off. Then look at the Russell. Basically, this is where Trump got elected. And then it basically, it just didn't do much of anything. I mean, so I think it's important, one of the great adages in trading is buy the rumors, sell the news. And that might really be a classic example here of the small caps and Trump.
Super interesting that we can apply the buy the rumor, sell the news adage to a major election, especially as we head into the new year. Now, how about, David, heading into the new year? Do you have any specific markets or sectors, or even just plans or strategies that you're thinking about? Because after all, this is our last show of the year. So,
Yeah.
to our almost 600 viewers now who have jumped in and out throughout the show, I want to give you an early Happy New Year and Happy Holidays or Merry Christmas, whichever big event that you celebrate. And with that being said, David, maybe you can take us through some of your thoughts as we give our viewers this last show of 2024.
Okay, good. Well, I am, if anything, I would say that this theme of return to large growth, or not even large growth, but organic growth, often going to be large caps, but there will be other names in there. People will be looking for the next Palantir. They'll be looking for the next AppLovin. There's an IPO. There's some IPOs starting to come out. So it's going to be, from my perspective, more of that environment. The risk will be in interest rates. The tech stocks can withstand, treasury yields moving up around 4.5, getting kind of close to 5%. But you get to a point there where people are going to start to get antsy. So if yields continue to move higher, that is something that can hurt sentiment, and people should be aware of that, because the situation of things like tariffs, the deficit. I mean, the budget deficit. I mean, we're traders, but I mean, it is not pretty. If you actually look at the deficit, and I think that's a risk out there that people are not accustomed to thinking about. But it should be at least something we're watching and monitoring. That don't like freak out about it right away, but to realize it. So that news came out, I think yesterday, maybe it was this morning, but that's something I think to think about. Now, I think though that when we look at it, from my view, one of the surprises this year could be a letdown in industrials. If you look at the industrial stocks, they've had on a very interesting. Actually, I think it's on this chart. Sorry, I have two charts I work with. I try and keep my weekly stuff on here. So what's interesting about the industrials to me here is that they've really had this interesting run, multiple times or this strong tight breakout. But now I think when you start to look at them, I think one of the things to realize about the industrials is that we had this whole IRA investment Inflation Reduction Act. There's a huge amount of stimulus, and I think we got to just realize is that the Institute for Supply Management. I mean, their data has not been good on industrials, and the market has basically ignored it. And we could be setting up here for this to just kind of peter and stall out. There's this huge assumption that we're going to have this renaissance of manufacturing in the United States. And the data does not entirely support it. So these stocks have traded high multiples. They have had a lot of stimulus that has pumped them up. And they might be at a spot where things are problematic. What's interesting to me is you don't pay attention to this, but a stock like Cintas, this thing was a total monster. And this is an industrial. So, I mean, look at this. There was no reason for this sell-off, this big candle back on Monday. I checked. I didn't see anything. Look at United Rentals. Also, no reason. So people are starting to dump. These are industrial stocks. So I think we need to maybe think about that. This could be something here where the industrials could be getting tired. That's the thing that stands out to me. That would also be kind of consistent or consistent with what I'd said about small caps. That sort of Trump cyclical trade. So I think we have to kind of realize that there's been this huge sort of kind of anticipation that small caps going to rally, equal weight's going to rally, and mid caps going to rally, and value stocks and all this stuff. And we've had some of that, but when you really look at it, and I'll just jump back with my TradeStation really quickly and show this to you. But if you really look on any kind of long term here, growth versus value, we really don't have any consistent outperformance of growth. This is growth, IWD versus IWF. We don't see any kind of consistent outperformance in value stocks. Another thing is that what's happening in healthcare has been pretty ugly. I want to also just mention very quickly biotechs. These are something here. If you look at this, I mean, the IBB, for example, look at that. Let's do a Fibonacci retracement of this move. I mean, basically, we win a little bit above 50% retracement, depending how exactly you draw it. But this does not, so this is also small caps. So as I look at this, I think, the healthcare is standing out to me as an area where we could see there's things to be worried about in healthcare, things like industrials, and also a lot of these, biotechs are not value stocks, but a lot of healthcare stocks are value stocks. So I think right now when we look out, things like healthcare, that's an area where we've seen negativity. It's I think probably the worst performer this year, or one of the worst or second worst sectors year to date basis. And they've been running for a long time. We recently did a TradingView idea on Eli Lilly, basically on this gap, and it might have just had a death cross also if you look at our TradingView ideas. But so these are some of the things I kind of see popping up, and then I'm kind of looking at what might happen with like I said, with these kind of growth names. I am curious about gold. I'm not sure exactly what to think of it. I do think we have to realize is that there is, the ongoing sort of idea of de-dollarization around the world. It's not something that always gets a huge amount of attention, but just Central Bank of China just bought a lot more gold in the last few weeks. And so I think this is a trend to kind of be aware of. If we do see treasuries overall not getting bought by foreigners and foreigner central banks buying something else instead, I think gold is something we might want to be aware of. And names like Newmont Mining, this name had a huge pullback. And the thing though is that, at a certain point they had bad operational issues. This might be something that has a potential for a turnaround. There's other one, Barrick Gold. These also have had big drops, and now I'm just kind of watching them to see what happens. I'm not necessarily, obviously you look at the charts right now, they're not clearly bullish, but I think when you look at things like this, you could see that the potential for something here in a month or two, if it stabilizes, where things might change. The other thing is, if we do start to get toward the environment of a weaker economy, I think that people need to think that there is some potential of stagflation here. There's been good things about the economy, but continuing jobless claims continue to increase. Today, claims are higher than expected. The data from the Institute for Supply Management has not been terrific. There have been various reports that suggest that the employment data is not as strong as people think. So at the same time, you have PPI today higher than expected. CPI is no longer falling. I'd say that there is a chance that we end up in an environment of slower growth and inflation that has not been defeated. And in that environment, something like gold could have a big renaissance. So I think this is something that we want to kind of bear in mind. It might take a certain amount of information. We might need to have the Fed stop cutting and then more information coming. But I think we should realize that there seems to be a secular uptrend in gold, and that's another thing that's on my radar.
The gold chart and data is so interesting, especially because, as we were saying and just researching, gold is actually also outperforming the S&P 500 this year, only
Yeah.
by 1%, but still gold I think is up 29% this year. The S&P 500 is up 28% this year. And essentially it's the first time in quite some time to where both assets are up this much and gold is outperforming it. In fact, I think that's only happened like once or twice in history to have them both up so much in the same
Yeah.
year. And yeah, so now you're marking up the chart. Curious to hear what you're seeing here. And I'd love to discuss the gold miners more a bit after as well, just in terms of it's kind of ironic to think that gold prices are going up, but the gold miners that actually get the gold are going down. It's kind of interesting. Like you'd think it'd be the opposite that they would track together, but let's see what you drew up on this gold chart first.
Well, I mean, there is this downtrend that there's potential for a breakout through here. And so from my view, that's kind of what we want to watch. I think here's something we want to watch on the daily. And, a lot of this is going to be based on events. And I'm not sure exactly what to watch. But to me, I think the most important thing is the fact that it really it has not given a sense here that it wants to go lower. I think when we look at this, this is something to me where, look at how we held this level from back here very sharply. We have these two, like, both of these really nice bounces above that level. So from my perspective here, this is something where long term, it seems to be confirming a bullish pattern. How exactly to act on it, I'm not super sure. And a lot of these things are going to be based upon macro events. So from my perspective here, gold is something that it's kind of still giving us the longer term sort of signals. And I think it's in a secular bull market. And I think that's something that, um, you know, from a trading perspective, a trend following perspective, you need to look at where those opportunities. But knowing what's in a secular bull market is really probably half to two-thirds of following it is to be able to really recognize this. And I think that this is ultimately a question of the fact that um, Europe's in trouble, economically. The United States has been pretty good, but like if some of these issues maybe don't work so great, gold is maybe it's not as finite as Bitcoin, but it is a traditional kind of money. And this idea of these countries like this BRICS and everything, I mean, they're going to use gold in this kind of new financial system they're creating, and that could be a big deal. So I think this is just to me a secular uptrend, and right here, I'm not really sure what signal we're looking for. I haven't done the idea yet on TradingView. I mean, obviously this weekly level, a close above it would be a signal, but I'm not sure exactly yet. I don't have a clear guidance on it, but I do think long term it's doing everything it should if it wants to continue higher.
So I have to say I've been trying to look into some data because something you said that was so interesting too was that central banks have been buying gold, and I think I had saw some data as well recently that suggested that 2024 was one of the larger central bank gold buying processes, in quite some time. And I just have to wonder, with the amount of capital that central banks have or can put to work, how much that was involved as well in this run up. But it's quite interesting. I don't know if you have any stats on that or any insights, but curious to hear about that larger macro picture. If you think central banks have been involved this year, 2024.
Oh, they definitely have. I mean, there was it's usually I think the World Gold Council. Now, some people accuse them of being, of pumping up gold, and maybe they're overly bullish in terms of their research, but they have been out there for a while. And if you look at them, they recently published this information about. I think it was them that came. They were the ones I think who published this. So I look at the combination of the price action, and I also just look at the context of the fact that the biggest thing in the entire world is the U.S. Treasury market. And if certain people are shifting from the Treasury market to other things, as central bank reserves, then that's something I think is that's all. That's kind of the story right there. It could simply be a secular shift away from U.S. Treasuries and European, sovereign debt toward things like gold. And I think we're seeing it. I think there's a significant amount of anecdotal evidence when you look at it, and then you look at the other things that have been happening in the world, and then just the overall situation of if we do end up in a stagflationary environment, that's something that gold is something people are going to be interested in.
Well, on that note, just to bring some data as well to the table, I was just observing which countries and central banks hold the most gold reserves. Just thought I'd read them off. It's the US with 8.1 8.1 metric tons. Well, 8,000 metric tons. Germany with 3,300 metric tons. Italy with 2,400 metric tons. By the way, I bet if you looked at gold per population or per capita, Italy at 3 with 2,400 metric tons. I thought was pretty interesting. That's a lot of gold for not that popular, a country that's not that populated. France, 2,400 metric tons. Russia, 2,300 metric tons. That's your estimated top 5 for gold holdings. I'm not really sure what context that provides. It is interesting, though, I think, nonetheless, in light of gold's move this year. And how about what other charts are, unless you have more to add to the gold story?
The last thing I would say is, there is my sense is that this is something that Trump very well in the near. I mean, there's a lot of fear he's going to pump up tariffs and stuff, and we could be in a situation where it doesn't happen right away, and we might actually be in an environment here because ultimately the Nasdaq is broken out and we're in a bull market for stocks. And so the thing is that we could see news actually break bearishly for gold in the next few weeks. And I would just say people might want to be thinking about some of these levels to be kind of thinking about buying on looking for breaks down toward 2,500 or 2,550, 2,600, and be thinking that way of looking for levels where it might bounce and realizing that this might now be a high for a while, and to realize that this is something of a range and it's not a clear sort of breakout here. But the thing is, also realize that if we do get a breakout, if we do have a weekly close above this weekly close back here in mid-November or late November, that also could signal that it is going to that it could have momentum to the upside. So from my view here, this is something that has a potential for a breakout or a potential for consolidation with kind of buying kind of smash downs when it kind of smashes down into support, and then have limit orders down there or something like that to look to buy it cheap. Those are kind of my two views of it right here. It's pretty tricky, but that would be kind of my view of what to think about gold.
And I do you want to take this part of the conversation full circle, especially those of our 650 plus viewers throughout the live show who remember David also talking about some of the large cap tech stocks that were outperforming and that they had a lot of cash on hand. I just want to provide, give both assets, right? It's limelight. It is important to remember that, these companies that also hold cash, not necessarily gold, are benefiting in a way to where they're collecting potentially interest on all of the cash they have around the different banks or wherever that cash is held. I only bring that up just because, I just think it's rather interesting to consider in light of gold's run up and central banks, like what are the cash rich companies doing? There's definitely some serious analysis to do here. And I see you've got the TradeStation profile open. I'm guessing you wrote some research about this. Is that correct?
Yeah, I did Amazon. I was just looking for this article since you were talking about some of the large caps. I'm interested to know about their balance sheet though. So we had done this back on the 26th.
Yeah, oh wow, check and look at that. I mean, that's such an interesting move by Amazon. It's just I feel like they were one of the I think you actually okay, for those who follow the show, I have to give David some props here. David, I think you brought up Amazon on our last show or the show before saying it was one of the hidden AI players. Everyone was so focused on Nvidia and a few others, I think even Meta to some degree, but no one was talking about Amazon and its already cloud capabilities and how it could be a player in this AI sort of arms race. So nice call by you.
Thank you. I also mentioned Apple. I mean, it's interesting here to see Apple what was interesting to me about this is you could see it basically close at a new high, and once it kind of hit that new high, just you had that continuation. So this is the pattern we've seen in these large caps, and the kind of momentum, the amount of money involved in moves like this, it doesn't just go away, quickly. This is, the sort of thing people might say this is significant accumulation. This is exactly what the idea of like the what's his name, the How to Make Money in Stocks, the O'Neill book, when he talked about cup and handle growth investing in, kind of momentum trading growth stocks. He wrote that book back in the 60s or 70s. But this is exactly what I mean, you could argue this is something of a cup and handle, I guess. I don't really pay attention to the cup and handle as much as the fact that there were buyers pushing this thing to new highs, and once it happened, it just continued. And I think we've seen this across the entire space.
Something you said that's so interesting about Apple in terms of the
Mhm.
money that's needed to move a stock like that, because I agree, we're talking about a $3 trillion company, and that is significant capital then to move a $3 trillion company. And that breakout actually is exactly shocked me for that exact reason. I must say, I was watching this Apple chart saying, where is all this money going to come from? Sure enough, it broke out. Look at the chart now. And I would add, though, that there's a good educational lesson there for all the new traders out there, which is to really put into context, what type of money is needed to move some of these assets. And quick backstory, I remember when I was a new trader, in high school, maybe had a couple $100. Maybe I was buying some tech stock. I thought my purchases were sort of this like this big deal, but a couple $100 is, you can't even see it in terms of the scope and size of what the market is. And for Apple at 3 trillion, pretty enlightening, just the sheer amount of money needed to move a chart like that.
Yeah, and I think that's where we are right now. I think one thing I got to mention is, and I talked about this. I can't remember if you and I have spoken about this, but I did a webinar a few months ago, and I basically looked at the Consumer Sentiment Index now, and it's very similar to where it was in 1982. 1982 inflation was something. It was 6 or 7%. Unemployment was like 8%. And if you also compare the consumer sentiment where it was over the summer, it was lower than it was in 1999. I can't remember the exact numbers, but basically there were other times when consumer sentiment was much higher, but the underlying data of inflation and unemployment were not nearly as good, like in the early 2000s or the mid 2000s. And so what's interesting is, in my view, we have had a negativity bubble in this country, and in some ways, that negativity bubble has broken after the election. For whatever you think about the politics, people are now wanting to be happy. Now, maybe they're wrong. Maybe there will be bad things. Maybe tariffs will kill the economy. Maybe there'll be this. Maybe there'll be that. But the thing is that hasn't happened yet. So the thing is that a market will follow the vision that it has. It has like it has a vision in front of it. Now, that vision might turn out to be true, but it might turn out to be a fantasy. And you don't really know until you follow it for a certain time. That's why stocks will run on hype and then they'll crash. But other stocks like Palantir, it runs, you say it's hype, and then no, the earnings come through. So I think that's the thing to realize is the market is always looking out and seeing something and then waiting for verification. And I think right here, yeah, we might have that danger, but right now people are acting on that sigh of relief and that extreme negativity having broken. And now the question is, there could be a time when those negatives actually are real and people will act on them. But you need the confirmation of that yet. So the last thing I would kind of leave you with is just the idea of the VIX. The VIX has not gotten stupid yet to the downside. If you look at other times, the VIX gets reckless to the downside. I'm the long-term sort of going to even just hide these. But if you look, I mean, there were times here, and I remember like this time, and when it just went down under 10. And I think we might be in a spot now. We have to realize is the VIX has not even gone to a new low yet, and at this point, unless yields really run out of control, we might be in a spot where I'm not going to say that they're going to how low the VIX is going to go, but we're not really in a spot necessarily where the fear can really is necessarily going to take over. We might have an environment where volatility remains low, people risk appetite continues, and then it drifts to a certain point in time. It's not clear when it might be. It might be sometime in the spring of next year, when people say we've been running for 12 to 18 months and now we're fatigued, and that might be the situation. But when the S&P breaks out to new highs, historically it continues upward for over a year. So we broke out like January of this year, so we're getting close to a year. But this, historically it's been a great run, but it's not that long in the tooth yet. And the volatility has not gotten down to the point yet when you can say there's complacency. So I think that's kind of just my overall view here, is that the other thing to watch is going to be volatility. And when the market's hitting new highs, and the idea of Trump coming in and the sentiment having had this turn, we could be in a spot where it remains in a positive environment, and then that's just the sentiment and the trend for now. And it can be hard to stay in a market that continues to shoot higher. You want to get out of it. Your emotions often tell you the opposite of what you should do. And I think that's kind of a spot now where a lot of people might find themselves, and simply following the momentum in large technology and large growth, that might very well be what the trend is for the next few months. And, I think it is important just to realize the Fed meeting next week is a kind of punctuation along that. Those are all different things. It might be something when people ignore the higher yields for a period of time, and then all of a sudden it becomes a problem. So I think that's just the way the market often behaves.
Well, I have to say, David, on that note, as we hit that hour marker, that is a fantastic way to wrap up the show. Although I think you might have one more chart for us.
I gotta end.
Let's see it. Yes.
This is not Palantir. This is not Super Micro. This is Walmart.
Walmart? What the heck? Walmart is what?
I just had to mention, this is a weekly of Walmart. I just wanted to mention this one because this is another company I wanted to say is now in the club. Like it or not, Walmart is now an AI tech stock. They're using AI. If you look at their information, they are now, they've kind of crossed that line from, what they were to this kind of tech-powered growth stock. So I wanted to just mention Walmart has joined the club.
That is anecdotally, as we head into 2025, a very interesting chart to end on, because it's actually kind of, though, I'll say, to your negativity bubble, I actually find this Walmart chart to actually be kind of like the antithesis of the negativity bubble, because it's a reminder of how many companies might actually be sitting on something fantastic that has been misunderstood for many years and is now finally, the investor base is seeing the light, the positivity is coming back. Maybe there's a basket of other companies just like this, and even kind of takes us back to what happened with Spotify, Palantir, those other charts we were looking at. And if Walmart's doing it at that market cap and potentially being an AI play for various reasons, maybe they're getting into, I think they might be getting into more cloud computing capabilities. Just wow, as we head into 2025. I did not realize Walmart was doing this. And I suppose that you probably want to end it on the Walmart note, but if there's any other final advice that you want to leave us with as we head off into the new year, please share it. And before I give the mic to you, David, for our final note, I just want to thank all of the people who have joined us and joined David and I 2024. I was doing the math the other day. It's something like 35,000 plus individual, unique traders or investors who are hopping in on YouTube. And on TradingView, I haven't even done the TradingView number, so it's going to get even larger from there. It's probably in the hundreds of thousands. So thank you to all of you, and we look forward to making it a great show in 2025 as well. And stick with us, because I think those of you who are watching the show are seeing some of the great insights and educational content coming from it. So on that note, have a great new year. And David, any final notes you want to leave us with?
I think just remember, retail sales are Tuesday of next week. Fed is Wednesday of next week. And, those might be things that if people are looking for, a kind of end of the year sort of, time to take profits and go home, it might be things like that. So just kind of keep those on your radar.
Thank you, David. Always enjoy your reminder for us to look at our economic calendars. I feel like it's like a now reoccurring theme. All right, we'll wrap this show up. If you have any questions or comments, as you know, write them in the chat or the comments below. And thanks for watching. And David, I will see you in 2025.
Have a great New Year, Steph. I'll see you soon.
You too, David. See ya.